Hi, Adam Thompson here from My Mortgage. Today I'm talking about bridging finance. What is it and how does it work? So, in short, bridging finance is when you've bought a property but you haven't yet sold your old property. So you've kind of got to keep your current home loan that you've got, but you need to borrow a whole lot of more money to settle on the new property before your old one sells. Look, it used to be easy back in the day. The bank would go, hey, you going to sell that property? You go, yeah, don't worry about it. They go, cool, here's some money, it's all good. Unfortunately, we're in a much more regulated market than that now, and it's just not that simple. The bank, under the Responsible Lending Code, can't actually allow you to have lending that you can't afford to repay in the long term. So often when people are buying a new property, they're more than doubling their mortgage if they haven't sold their other property. So it's not always affordable. But there are a few ways that we can approach this. So the first of all is to go, hey, well, could you rent out your old property until it's sold? The rental income from your current property then might allow you enough income to be able to borrow that new money, and then there's no pressure on you to have to sell it within a period of time. The key thing there is that we don't want you under pressure having to sell your old property when you've moved to the new one, and then taking off of that might be 50 grand less than what it's worth, just because you're feeling pressure because your funding wasn't sorted, or the bank was putting pressure on you, and you didn't really need to have it. So if we can set you up a structure like that that allows you to sell on your terms, it makes it a lot easier. But hey, what about your equity? Now, obviously the banks can't lend you more than 80% of the value of a property, 60% if you're going to rent it. So you have to have quite a lot of equity if you do want to bridge. And that can pose a bit of a problem for some people. But hey, what if the equity doesn't line up or the income side of it doesn't line up and we just can't make it work? Well, there are non-bank options as well. There are some second-tier lenders who will go, cool, we'll give you 6 months to sell. You're going to have to pay a higher rate for it and there's going to be some extra fees, but it gives you the flexibility to secure that new property for whatever reason that is, whether it's just a deal of the century or you need to make it happen in that time frame, you're moving out of town or whatever it is, that just allows it to work for you. So there are a number of options. It's gotten a lot more difficult than it used to be, but like everything, it just starts with a conversation. Go, hey, if I do this, what are my options going to be? And we can help you to work through that. All too often we have people going, hey Adam, I bought another property, but oh shit, I need to sell mine. The bank should be able to do it. And really, hey, if we just get you before you fall in love with that new property, have that conversation, we can go, great, yep, you can go and buy a new property, you can go up to this much, and this is how it's going to look, and this is what your repayments are going to be. Here are your time frames, and this is what you can do. So, look, we always try to make it simple, and we know that can be a bit of a rough road to navigate, but if you need to do it, have a chat to us, we'll get the options in place, and we'll make a plan for you.